Ethereum is about to tank, and you need to know exactly why, because it's not going to be pretty. That's going to be the main focus of today's video. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. By far, the best way to read the markets is something called Elliott Waves and Fibonacci ratios. What we're going to look at today is the psychological mood of the buying and selling behavior. And we're going to do there's some textbook patterns that are showing right now, and we need to be really aware of them. Caveat is probabilities and never certainties, but it's high probability. And that's what we're looking for. And we always want to go with the edge. That's the whole idea and the thinking behind this. So I actually have a course, and it's an Elliott Wave and Fibonacci course. And we're going to use some of the elements from the course to make a few points really clear. So Elliott Waves is the pattern position. So we're gonna use that. And then Fibonacci ratios is where we can measure those waves and the relationships that they have with each other. So we're going to focus on Elliott Wave initially. So there's some key fundamental rules with Elliott Wave. So we're not going to go over those today. What we're going to really focus on is lesson 6, 4 types of ABC corrections. And lesson 6 is really about the ABC zigzag. It's the most common type of correction. And I just want to show you the visual. Right, so the video goes over it in detail, but I really want to just go over the visual so we can really see, is Ethereum looking like this? Is it looking like this? And if so, what's likely to occur next? So what we're going to see with Ethereum, so we're going to go into Ethereum in a second. This part of the movement seems really clear. And it looks like we've just formed the textbook A, B, C. And now we should anticipate a further leg to the downside. Yeah, so we're going to have an ABC on the way up and then on the way down. That's what we're going to use for today's video because it's really important. So I'm going to keep these lines on the chart over here because I'm just going to see if we can mirror it over here. Look at this, right? So it's pretty much textbook. You see that? So we're going to do that again because it's really important that we see this is the theory. This is like, we drawing it obviously with lines and straight lines. And then this is the reality. So after a typical ABC on the way up, on the macro, we're going to look at 2 degrees. It's called 2 degrees. We're going to anticipate this movement here. So this is what we're seeing with Ethereum. Why do we think it's going to tank? It's because of the textbook chart pattern that we're seeing. No emotions, just mechanical and just objective. And by the way, if you want to learn more about Elliott Wave and Fibonacci, Masterclass in the link below, and you'll get access to the course. I believe it's still £97. We're still doing like an amazing discount for the entire course. But that's what we're going to use. So now let's just draw these labels on this. Let me just clear this. All right, so first of all, let's just draw the label on the intermediate count, A, B, C. I'm just going to label that as intermediate. Right, so hopefully that's making sense. So we're using this here, A, B, C, and here, A, B, C. What do we anticipate to happen on a macro, as in the larger degree, is we're seeing this part as an A and a bigger degree B, and then we should anticipate one more move to the downside. I just want to draw it like this, just so we're really on the same page, because I know if you're not used to Elliott Wave and Fibonacci, it can be a bit confusing at first, but with practice, it gets easier and easier. But I just let me see if I can do a side by side. That's my wife in the background. Let me, sorry, this is not what I wanted to do there. Give me 2 seconds. What I wanted to do was, let's have a look. What I wanted to do was, if I can pull this up like this. There we go. This is what I was trying to do. Here we go. This is what I was trying to do. Well, I just want to make it really clear what I'm showing you here is the theory. Look out, it's like textbook stuff here. It's textbook. Again, look at the theory. It says movement down, and we got this movement down, very clear. This A, B, C on the way up, and it looks like we formed an A, B, C on the way up. And what should we anticipate next? So the next part hasn't unfolded yet, but we want to go with the edge, what's likely to occur. And the likelihood is that we will exceed the previous low. That's what we're talking about here. and then it's typically a wave C that breaks down into a 5-wave sequence, and that's what we're referring to. Right, and I know that's going to be scary for the market if you're not used to it, but now we can see where and how long, how far down is it likely to go, and then we can, let me just pop this back up here. Let's go back up. So I'm going to join it back in. 2 seconds. Get back in there. There you go. All right, good. I'm going to leave it over here. All right, so let's just get rid of this now. So we're going to move on to the next bit now. So by the way, link in the description below. It's this over here. Yeah. One click, and you'll be able to take the masterclass. At the end of the masterclass, you'll get to buy the course. It's £97. It'll really give you the high-level detail and the actual detail itself on how to leverage Fibonacci and Elliott waves. So now what we're going to do is we're going to use something called Fibonacci ratios. And we're going to do two things here. We're going to focus really on... Let me
That's type 1 of the ABC correction. What we're going to cover next with the 4 types. So we did 4 types, so we're going to move to the second type. And the second type is called a flat correction. Flat. So we're going to dive into
what we're going to focus on is we're going to focus on this bit.
It's still ABC.
Why is this a high probability top?
And it tells us
and
something slightly different.
Where is it likely to go?
But we're going to be aware of
it.
It.
So we're going to focus on 2 things.
We can act upon it.
So this top bit here,
all right, I'll see you.
We're going to focus on. I'm just going to get rid of this line. It's going to focus. Okay, we've got 2 degrees of counts in terms of a wave C over wave B. That's what this top part is called. We're going to use something called a Fibonacci retracement. I'm going to do these relatively fast. I cover these in more depth in the actual masterclass itself. And then the course really breaks it down on the how to. We want these 3 ratios. We can see that this one is going to be the relevant one. So we can see we're close to the typical correction in terms of this price reached here. And if we go to a candlestick, let's just see. Yeah, it just tagged it, the typical minimum for a correction. Then we're going to do something called, we're going to do 2 more things. We're going to do an external retracement. Most people are not aware that you can do this. What we're looking for are these really important ratios that coincide with each other. They coincide, they overlap, and that gives us a very high probability resistance zone. And there's key ratios that we want to be aware of. But the main one that I'm going to focus on is that I'm going to show you in the video is, I think it's this one here. We're going to go into the Fibonacci section. So with the course itself, it breaks down to Elliott Wave. So it's all the key fundamentals for Elliott Wave and then Fibonacci ratios, £97. You get access to everything. And you'll get an invite to my private Telegram. We do weekend workshops. So we've got a workshop today in 90 minutes. In 90 minutes, we've got a live workshops where you'll be able to ask me direct questions on the coins that you're looking at. But what we're going to focus on is here, lesson 18, where it says Fibonacci price extension for a wave C. And we're going to use this on 2 degrees. We're going to use it on 2 degrees. This will make sense in a second. Just want to show you the visual.
We're on the same page. We got wave A.
Let me just get to this section here.
This
Bang. All right, for a wave, end of wave C, we're going to use it on the way down, but also on the way up. And that will make sense in a second. What we're basically doing is we're measuring this wave and we're projecting it forward. And normally, the typical is 100%, 62% or 162%. But this one is the most common. But what we're going to do, because we've got an ABC on the way up, we're going to first do it measuring this one and then this one. That'll make sense in just a second. And I'm doing it 1 step at a time, not at pace, because everything is difficult before it's easy. But with practice, it does get easy. So what we're going to do here is we're going to measure this wave A, and we're going to project it forward from this wave B low. And it'll give us an indication, because wave A's and wave C's are normally identical. They are normally pretty much identical to each other. So I'm just going to measure this, and you'll see this here. And look at that. This red line is really significant. So we've got this significant price zone coinciding with a pretty clear pattern, A, B, C. And then we've also got momentum and a few other things as well. But there's a very high probability top. And if you do have an ABC, what's typical next, high probability, is that it will have a continuation of the former trend. The former trend is this. therefore making a new low. So now what we're going to do is we're going to do the same ABC correction, but now we're going to measure it from this wave A and project it from this wave C. And that's just going to give us an idea, in an objective, mechanical, non-emotional way, where is Ethereum likely to go? Whether you love it, whether you hate it, doesn't matter. Put it to the side. If we believe in the fundamentals or we don't, if we love the blockchain and using it, whether it's high gas fees right now, with the change that's happening, with the delays and everything else, we put that all to the side and just go, what is the psychological mood? All right, so that's what we're going to look at right now. So what we're going to do here, again, same thing, just popping back to this. This time we are doing this part here. We're going to be really looking at this part here, measuring this wave and then projecting it forward from the wave B top and getting some projections. And these are typical buying and selling behavior ratios that we want to be really, really aware of. So now we're going to just use this tool. This is trading views called trend-based fib extensions. We are going to measure this wave A, project it from this wave B top. The two ratios that I'm going to really, really pay attention to is 62% and 100%. Whether it's going to happen or not, we don't know, but this is just a very high probability zone. I'm also going to show you something else as a bonus, right? Most people don't know this. The length of time it takes, how long it takes this to form, which was, if we look at the dates over here, the date is November 7th, and down here is Jan 22nd. So what's that? That's around what's that? It's like 2 months, right? 2 months. Yeah, November, December, 2.5 months. But we don't even know what we need to do is now take the time and project it forward from over here. And that tells us that the correction is likely to be in this zone. So around mid-June. So we're talking about 2 months. 2 months of sideways to down. And that gives us a nice price and time target. Very, very simple, very objective, very mechanical. So yeah, we just need to be really, really aware of this. There's a few other things that we can do. I cover it in the course, like momentum. Momentum is a very powerful tool that you want to coincide with this. But just to make it really, really clear, our thinking is, again, on the short term, we might see something like this. But what we're going to focus on is the macro. The macro would say, boom, what's this low over here? Scary to say, but just the objective number, the conservative is 2,000, and the low, the 100% is 1,100. Are we going to see $1,100 Ethereum? Jeez, can you imagine? Can you imagine? Well, look, it is what it is. What do you want me to do? I have some of my students, we have like 400 students, and it's like, yeah, I hope you're wrong. I go, me too. But the fact of the matter is we just have to prepare ourselves for this. If you know how to short the market, some good shorting opportunities. If you're going to hodl, just prepare yourself emotionally. Now, if this does occur, let's just finish on one last thing. If this does occur like this, and the correction finishes down here, let's just say it does, worst case scenario, or the high probability worst case scenario, what will typically occur next? Well, what will typically occur next is a continuation of the trend. After an ABC correction, you'll get a continuation of the former trend, and the former trend is actually on the way up. The former trend is up, so we should anticipate after June, not overnight, eventually in the second half of this 2022, all-time new highs, but we're probably going to see a lower low below, what's this, 2,200. That will be the first indication that we are on track for this movement to the downside. And then over here is where there might be some great buying opportunities. And then is to prepare for the second half of the year. So there you go. Don't shoot the messenger. I'm just the messenger. Yeah, but do take my free Elliott Wave and Fibonacci Masterclass. You'll be silly not to buy the course. The course is just phenomenal because, as you can see, it is just textbook. When we look at this, I want to emphasize this.
The fact doesn't.
When we look at this is the next lesson. The most common one is the ABC zigzag. This is what I wanted to cover here.
The macro
to kind of remind you here, I kind of break it down, bang. Look at this. And then when we look at this, and then we look at what we're seeing over here, this is what we're talking about. I know there's a lot of lines over here, but the real focus, the real clarity is this movement to the downside. It's clear as anything. This ABC to the upside. And then this ABC style pattern that we're looking at. I like to personally put a question mark here, because obviously this is not confirmed right now. We are looking into the future of what's likely to occur. Probabilities, never certainties. What will void this or invalidate this wave count? If the price does shoot above here, which is also possible, keep that in mind. Then we just need to reevaluate, then it might be something more of a complex correction. But at this point in time, right now, the probability is sideways to down and just be on high alert. And again, just get the course, because it will give you a massive edge in the market. So you're sharpening your tools and it will give you a higher edge on winning, right? So if you like today's content, like, subscribe, hit the bell notification, just keeping it real over here. No hype. It is what it is, right? It is what it is. So we're going to read a quote. It is from Mr. MJ. Yes, Michael Jordan. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I failed over and over and over again in my life, and that is why I succeed. Don't be afraid to fail. You have to put yourself out there and go for it, but it doesn't mean you have to be reckless. You can be mindful, you can be skillful, you can be artistic, you can really anticipate what's likely to happen and make the best decisions for you personally. If you're a long-term holder, so you just know what's going on. So you go, right, between now and June, just anticipate another 50% pullback, right? That's just from where it is today. That's just is what it is. And then after June, July, August, September, October, November, second half of this year, high probability Ethereum to make all-time new highs. Not guaranteed, but you can really, really plan and prepare. If you're more shorter term and you're whatever position, if you're looking to short the market or you're looking to take profits or you're looking to protect some of your gains or whatever, or minimize your losses, just be objective and mechanical as much as you can and then just prepare and anticipate. So don't be afraid of failure. Failure is one of the most key ingredients to success. In fact, let's finish with this quote, right? Because it's relevant. It's from a book called Black Box Thinking, and it's this: beneath every success is a mountain of necessary failure, right? So whatever the markets are doing, because a lot of people got involved in crypto at the peak, November times, and there's been in a big correction, and there might be a bit more of a winter going on in terms of sideways to down movements overall as a macro, money leaving the markets, a lot of panicking. But I think we're going to see a really, really positive second half of the year. So don't be too harsh on yourself, especially if you're brand new, because it's just the nature of the game. You can make high money on the upside, high gains on the upside, but big corrections on the downside. So you just have to be comfortable with that volatility. So take the free masterclass, send the link below, and I cover the Elliott Wave and Fibonacci principles. You get an opportunity to buy the course, £97, but you get full access, and you'll get an invite to my private Telegram, and hopefully I'll see you in one of my live workshops. All right, I'll see you very soon.